Hi everyone, welcome to another big Friday roundup. I've got some big ticket items to discuss with you and some interesting items as well, which we can just talk through and flesh out. Some good ones on why Bitcoin, is a commodity, uses a lot of energy. Another one's Tesla, that's probably the biggest one I'm going to look at. And I'm also going to end with just a little touch on the macro, which I always enjoy diving into with our advanced clients. So that is my particular angle today. I'm going to dive straight into this wonderful thread that I saw from, let me just share my screen, from Michael Saylor. If you weren't aware who Michael Saylor is, his company in the US, MicroStrategy, owns probably the largest amount of Bitcoin on a corporate balance sheet in the world. I think he does. I could be wrong there, but I'm almost certain they do. And they keep buying the dip. So their company is just fully behind Bitcoin and where it's going. And he's an educator now, and he's not only runs his company, but he tries to educate people on Twitter the best he can. Really, really good person to follow on Twitter if you do not, particularly because he doesn't get into fights either. It's always very civil, respectful, diplomatic, and this is what I want to highlight with this thread here. So above is Peter Brandt. He is one of the best traders of futures, commodities, and whatnot throughout the years. He's, again, one of the most respected traders out there. And he's an interesting person to follow as well. And he owns Bitcoin himself, but he always has some interesting thought bubbles on the commodity, on the digital asset itself, the narrative, where it's going. And he likes to poke holes in things. And Saylor came in and had a rebuttal to one of his questions. I just want to cover it and have just a quick chat about it. So Peter Brandt is retweeted Michael Saylor's original tweet of Bitcoin as a digital commodity because it has no issuer and is secured by energy. Then Peter says, secured by energy only in the sense that it is useless without an exorbitant use of energy, and then without providing economic function. It is a huge myth that somehow BTC is anything but energy consumption. Now, I personally disagree with that, but Michael Saylor's response here was fairly awesome, I thought, and we can discuss this in a sec. He says, all commodities require energy. Since Bitcoin is a commodity, it can serve as global digital money. The economic function is to provide property rights to 8 billion people, as well as a global settlement network that has already cleared $17 trillion so far this year. And just look at this chart. See the trend of where this is going. Bitcoin is not going away. It's actually the opposite. It is growing at an exponential rate, since back in 2012. It was created in 2008, 2009, but just since then, growth every single year, every single metric we look is showing up and to the right growth, including wallets, adoption, usage, volume. So this really needs to be discussed, and energy usage isn't inherently bad. And if you actually dive into Bitcoin mining, energy use and all that, it's actually quite interesting because it's not as the media portrays it. So a recent study showed that 60% of Bitcoin mining is actually based on renewable energy and is trending towards 100%. Now, not many other industries have that kind of energy mix right now. So Bitcoin can actually be held up as a bit of a standard bearer on how to move towards that environmentally friendly angle. It also uses a tremendous amount of wasted energy as well through hydro, and other sources, hydroelectric, and there was another one that just escapes me right now. That's right, methane gas capping, and also flare gas. So Bitcoin actually incentivizes that side of thing. And you see massive companies, massive energy companies like ExxonMobil, who are a bit infamous for their oil and drilling and whatnot. They're actually using Bitcoin mining to cap their gas wells. So that is really, really fascinating. So they're stopping, Bitcoin mining is allowing them to monetize, stopping the gas flare from going into the atmosphere and polluting. So by doing that, they're monetizing that excess energy that ordinarily would just go to waste. They're mining Bitcoin with it. Suddenly they're creating something that they can then go on and sell or put on their balance sheet. It is a super, super interesting area. I also heard a tremendously interesting podcast the other day where garbage dumps all throughout the world have a lot of methane, obviously, that's gathered underneath, and it's escaping into the atmosphere. Some of these dumps can afford to put a methane cap on it, where they mine the methane and sell it back to the grid and go from there. We know methane is one of the worst gases that gets pumped in the atmosphere, including CO2. However, what Bitcoin mining is allowing a lot of these dumps to do is afford to put the cap on, continue to do what they're doing, mine Bitcoin with it, it monetizes the whole situation for them. So they're earning a profit from actually capping the methane in a lot of these dumps and stopping it from escaping into the atmosphere. It is incredible if you look into what Bitcoin is doing. And if it trends towards 100%, I don't know what we're talking about. Christmas lights every single year use more energy than Bitcoin. So, you know, we can point fingers at Bitcoin. I think it's just a fun thing to poke at for a lot of people right now. And I think it is entirely unjustified. So that was just my piece on that. And Michael Saylor, I thought, did really well talking about, you know, the use cases and why Bitcoin uses energy and why it should. Energy usage inherently is not bad. Okay, this was probably one of the biggest bit of news all week. So Elon Musk reveals why Tesla sold 75% of its Bitcoin. So Tesla, in many respects, fueled the big retail boom that we saw in 2021. Once they came on board, everyone was like, okay, well, here we go. Let's get some Bitcoin. Let's move it to altcoins. NFTs happened. So it just fueled that parabolic move up to about 60,000. Then we had another run up to 69,000 with the SEC potentially, well, and eventually they allowed the futures ETF for Bitcoin. So this is really fascinating that they in fact panic sold towards, I think it was 29,000. So when you look at the charts and you look at the timing, Tesla putting $1 billion worth of Bitcoin on the market and panic selling actually liquidated 3 Arrows Capital and a lot of these prime brokerages that created that contagion that went down to 17,800. So an incredible flurry of events from Tesla and other big institutions, funds, big investors that just wanted to get out, created that epic dump down to 17,800. So very, very interesting. They still own 10,000 worth of Bitcoin. He also said this is not the final verdict on Bitcoin for them. They just needed cash at the time. Now, Tesla is in a little bit of trouble with everything going on with you know, commodity prices rising, with electricity costs going up. And personally as well, Elon Musk's reputation is taking a bit of a hit. I don't think Tesla's going anywhere, but there's issues, especially with the share prices going down as well, just generally tightening with the Fed. They wanted to free up a cash position, and they had all this Bitcoin on their balance sheet where that was just a high risk position and it was easy to liquidate. They're looking at it going, well, we need cash. Where can we find it? We can't easily sell a gigafactory or land. Let's just sell the Bitcoin really quickly, get some cash. So that was the rationale behind it. He also said he's open to putting more Bitcoin back on the balance sheet in the future. I think this is a non-event. It's absolutely neutral right now, if not bullish, because he's come out and said that, you know, we'll put it back on the balance sheet eventually. But I think it is just very, very interesting that that is how the events happen, which the contagion and then the blow up down for that below 20,000, which a lot of people thought would never happen. So yeah, very, very interesting. And a lot of people are saying that the recent little drop as well over the weekend was due to Tesla. I don't think that's the case. I think Elon Musk used to be able to move this market just with the tweet and would go thousands of dollars in either direction. Market barely flinched. I think the what's happening on the charts is purely technical. We're always going to come back to that 200 weekly moving average. And we can all be very excited that we've actually gotten through it. And now we just have to retest it as support. And if we do, well, we're looking good for a bit of a bear market rally here. So yeah, wanted to cover Tesla and what they did there. All right, let's move on quickly to Ethereum because the merge is coming up. And I just wanted to follow on from this because Ethereum 2.0 for a long time has just been delayed and delayed and delayed and delayed. When it finally does come out, it will be very exciting because they're moving from one network to another, proof of work, which Bitcoin and currently Ethereum is. They're moving over to proof of stake, which a lot of other layer ones are going to as well for that less energy usage, and it's moving away from that mining system. They're going to a validator system. So this was interesting, but you know, there's not a lot of confidence in what I'm reading here. So just keep this on your radar. Everyone's getting excited for the merge, and we're likely going to see more progress towards the back end of the year, which should be a little bit of a bullish catalyst as well. But whether we see Ethereum 2.0, it still sounds like it is multiple years away. So could take up to 2 years, according to this article, as well as they're offering a date towards, I think it was September, unless I'm missing it here, September 19th as the tentative target for the merger. So again, this is just the beginning stages of this move to Ethereum 2.0, and you know, tentative, perpetual dates moving. It doesn't sound too confident. Some of these things will go off, but a lot of this will be left for next year and the year after. So just keep that in mind. This will just fuel that move to layer 2, so that next layer that's built on top of Ethereum to get that scalability really humming. And there's a couple of layer 2s that are really purring, and we cover that in our newsletter as well. Okay, this was very interesting. So getting away from Bitcoin just for a second, some major cryptos are doing still very well in this bear market. You know, not to a degree price rise, although MATIC has had an incredible price rise in the last few weeks. I think it's up 200%, something along those lines. But this is where you really want to focus on the fundamentals. What is the project doing? Who is it partnered with? Are things still moving forward? Is the roadmap moving? And this was pretty big. So Polygon or MATIC, they have been chosen by Disney to join the accelerator program. So you put Disney and any crypto that's a lower market cap or just looking to move higher. This is what you want. You want a massive major company partnering up with it, or just saying that they're related to it, essentially. And MATIC really had a run on this. If not, just MATIC is doing quite well in the space, interoperating between a few chains. So that was really interesting. So the accelerator program is essentially Disney's business program where they're trying to incentivize growth. But I'm looking a bit deeper into this, thinking that they really want to explore the NFT space and getting into blockchain and seeing how they can onboard a lot of their users and content through that means. So what's really interesting here is Polygon was the only blockchain project to be accepted into the Disney Accelerator program. So just keep that in mind. So clearly they like what they say, and whether they're just trying to pinch ideas or just get insights, it's a fairly decent step. They're part of the program. They will move forward. And again, a lot of this is about NFTs, and you can read down. So they get a mentorship and leadership from Disney, also participate in an on-site demo day. For me, again, looking deep, I think it's all about NFTs and getting that content out and monetizing everything that Disney has. And it's super, super interesting. Again, NFTs mentioned again, the former CEO of Disney also provided insights that maybe the current CEO can't. And he was saying this is all moving towards intellectual property and integrating NFTs, which are a super exciting space. So if anyone tells you that NFTs are dead, look, a lot of the, I guess, the JPEGs and whatnot, there's just a ton of supply and you can question their usage. I think a lot of it was a bit of vaporware, but NFTs at its core have an incredible use case that will revolutionize and disrupt many, many industries. All right, just quickly touching before we finish off, I want to touch on the macro because we know that crypto and a lot of risk assets really run on monetary inflation. Right now, supply-driven inflation, not so much. Because when central banks start to tighten, liquidity moves away, and clearly Bitcoin and crypto is not an inflation hedge in that sense. But when central banks and governments are printing money uncontrollably, we saw the run-up. We saw it happen in March 2020 when trillions of dollars hit private banks. The Fed was making bonds out of thin air and just throwing them everywhere. Bitcoin ran up to 60-something thousand. So that in itself should tell you that markets are forward looking, that they're running onto that, and they did very, very well. Now, what is happening in Europe is pretty frightening, but I'll just at a very high level explain what's happening. So the European Union has had zero or negative interest rates for a very long time to incentivize growth. So there's a ton of debt out there, just super amounts of debt, easy money, liquidity everywhere. So they really can't even look at raising interest rates too high or risk insolvencies everywhere, bankrupting everyone. They're in a really precarious situation. But the issue is they have inflation that is absolutely running away. So they have to be seen to be doing something. And they have risen rates by 0.5%, bringing rates from negative to zero, would you believe? I don't know how much higher they can go because things are going to get very, very dicey, but it is insane. And what makes this even more insane is the Italian economy and the Greek economy are starting to spiral a bit out of control in terms of their government bonds. No one wants to own them. They're being sold off. So yields are climbing, which makes interest rates, so sovereign interest rates that they have to repay loans on, the repayments are just going higher and higher and higher, and it has the risk of defaulting Italy, Greece, other smaller nations in Europe, and it creates a massive problem for the central big economies in the middle because they know they have to bail them out. What's happening here is the Italian bonds are starting to get out of control, and the ECB, the European Central Bank, is printing money to buy the Italian bonds to keep those yields down. That is QE. So they are printing money while simultaneously raising rates. It is bonkers. So where this leads, and I discuss it all the time with our mastermind clients, is likely yield curve control, which is printing unlimited amounts of money just to buy every single bond on the market. So we have at least, okay interest rates that people aren't going completely bonkers and countries aren't defaulting. It is a crazy situation. So like I said at the beginning, monetary inflation drives risk assets, crypto, So if Europe's going under and they're just printing and devaluing the actual euro currency itself, where's crypto going to go? Granted, it's not the US, but it's still Europe. It's a big place with a lot of money in it. So it matters. All right, guys, I hope you've enjoyed that, and I hope you've enjoyed my explanation there of the macro situation and how it's sort of just starting to spiral out of control. Absolutely wild. Have a wonderful day. Feel free to leave any comments below and we'll have a chat. Apart from that, we'll catch you next week for our Monday market update. Bye.